In the previous video, we discussed China's economic prospects for 2023. To summarize the previous video, China's economy is expected to grow in the late 4% range as domestic demand gradually improves as the zero-COVID quarantine policy is eased, and the economic recovery is expected to strengthen as the economic effects of reopening begin in earnest in the second half. In addition, consumption is predicted to improve little in the early stages of reopening, but it is expected to rebound to pre-COVID-19 levels by the end of the year when the recovery begins in earnest in the second half of the year. Economic policy is also likely to remain active in response to uncertainty in the early phases of reopening following COVID-19, as well as to assure stable growth and job recovery. Following the contents of the last video, we will conduct a preliminary check on the outlook for the COVID-19 reopening and future economic repercussions in this video. Because it's a short video, I'd appreciate it if you could watch it all the way through. In 2023, given worries about a slowdown in exports as a result of the global economic downturn, it is anticipated that the rate of economic growth will depend on how much domestic demand recovers as a result of the reopening, which has been significantly sluggish as a result of the zero-COVID policy. The Chinese economy will gradually increase its growth rate focused on consumption due to the faster than anticipated change in the government's quarantine policy in 2023, but due to inadequate preparations for reopening, uncertainty in the reopening process will be high and the impact of economic recovery will be limited. Problems exist. Given that the number of infected persons is quite likely to increase in the initial stages of reopening, the Chinese government is anticipated to concentrate its policy capabilities on preventing social unrest and reducing economic shocks. The policy backing for the steady operation of the medical system will be increased, while measures to assure supply and price stabilization for medications and quarantine items will be tightened. The management of high-risk populations, including the elderly, expectant mothers, and those with chronic illnesses, will be strengthened. Additionally, the availability of new vaccinations and treatments will be increased, and the aged will be immunized sooner. In 2023, it will be challenging for the Chinese economy to rise much above its potential growth rate, according to experts, even if the reopening goes through without a hitch. This is because of the weak real estate market and declining international demand. Sluggish real estate investment is anticipated to persist for the time being despite the Chinese government's policy support to stabilize the real estate market, and it will be challenging for industrial investment to continue increasing in 2022 due to declining global demand. In the event that fiscal capacity worries persist as a result of the government's increase in fiscal spending in response to the slowdown in economic growth in 2022, there is room for a reduction in the intensity of policy support for increasing infrastructure investment if domestic demand begins to rebound seriously from the second half of 2023. In 2022, the real estate market stagnation is intensifying, new home sales are still sluggish, and real estate corporations' investment is also sharply declining. From January to November 2022, the sales area of new product housing declined by 23.3% on an annualized basis, and real estate investment decreased by 9.8% as a result of a lack of liquidity. In the meantime, the Chinese government has announced a number of stimulus measures for the real estate sector as downside pressure on growth intensified due to the downturn in the real estate sector. After announcing initiatives to increase home demand, like varying loan interest rates and tax refund procedures, at the end of September, the 11 had established policies to encourage the delivery of completed dwellings in March along with steps to increase financial support for real estate firms through multiple channels. The Chinese government's recent stimulus measures for the real estate market aim to restore market trust by addressing the liquidity issue of real estate companies through direct financial support and supporting the quick completion and delivery of delayed housing projects that are sparking social unrest. Focused. The successful completion of the delayed housing delivery project, the removal of uncertainty surrounding the liquidity issue facing real estate companies, and the improvement in income as a result of changes to the COVID-19 quarantine policy will all be necessary for the real estate market to improve in the future. It seems challenging to bounce back quickly because of this. It is anticipated that the real estate industry will have negative growth in 2022 as a result of a sharp decline in investment and slow sales, followed by a delayed recovery in 2023. This will put downward pressure on GDP growth. I'd like to rehash what was said in the prior video. In 2023, the Chinese economy is predicted to grow at a rate of higher than 4%, with the recovery trend strengthening and focusing on domestic demand as a result of the economic attitude of stability and stable growth and the relaxing of the zero-COVID policy. The Consumer Price Index, CPI, is predicted to exhibit an upward tendency of about 2% annually, with the upward trend expanding and focusing on non-food and service costs as a result of increased demand following the economic recovery. In terms of macroeconomic policy, it is anticipated that accommodating fiscal and monetary measures will be used to get out from under the three pressures of contracting demand, supply shocks, and deteriorating expectations. In terms of fiscal policy, it is anticipated that proactive measures will be used to address uncertainty in the early stages of the reopening and to assure steady growth and job growth. By increasing the scope of the special relending program's operations and further lowering the reserve requirement ratio of financial institutions, monetary policy is anticipated to strengthen the real economy's support. The following are anticipated to have a big effect on the Chinese economy's recovery in 2023. With the reopening, China's economy will gradually grow stronger, driven by domestic demand, but changes to the quarantine fundamentals without adequate planning, such as an increase in the elderly population's vaccination rate and the availability of new medications and vaccines, increase uncertainty in the reopening procedure. There are worries that the economic recovery may have a limited impact. The Chinese government has been actively supporting real estate companies in an effort to boost market confidence, but the sharp decline in investment and sluggish sales are not showing signs of improvement. The slow-growing real estate market in Edo is anticipated to put downward pressure on the growth rate. Most importantly, thank you very much for viewing the lengthy film. I'll see you again soon with a better and more enlightening production.